Bitcoin's chance is here. Right on board. This is the moment that we've been waiting for. Since the beginning of the crypto winter, things have been unbearably cold in the crypto market. Investors had to keep up with that season, which collided with a slew of negative updates and cases in the crypto industry. But there is indeed an end to every pain. Cardano holders, that line is for you. Bitcoin is in the spotlight. It always has been. Ever since the massive spike, Bitcoin has been painted in every update on crypto media. Plus, in a surprising turn of events, the former US President Donald Trump voiced support for Bitcoin during a CNBC appearance, acknowledging it as an additional form of currency. He said, "There has been a lot of use of that, and I'm not sure I would want to take it away at this point." Trump's remarks marked a notable shift from his previous characterization of Bitcoin as a scam that threatened the US dollar. He also hinted at the need for regulation to address Bitcoin's growing influence. Also, Bill Ackman, founder and CEO of Pershing Square Capital Management, offered a speculative take on Bitcoin's future, envisioning a scenario where its price could skyrocket indefinitely. Ackman's comments sparked a lively debate within the Bitcoin community, with Michael Saylor inviting him for a direct discussion on the topic. This is a refreshing season as Bitcoin continues its upward trajectory, which is fueled by institutional interests and changing perceptions. This simply shows that the cryptocurrency landscape remains dynamic and ripe with potential. Investors eagerly await further developments as Bitcoin aims to solidify its position as a mainstream asset class. However, there was a note of caution from Block Tower CEO Ari Pauls. Paul wrote on X last week, "Every crypto cycle, I turn pessimistic Cassandra around here," and public warnings. "My best guess is that today equates not to October 2021, but more like January 2021. Still, I think we have 4 innings left in the 9-inning bull market, but time to start stealing the backbone and psychologically preparing to do a really hard thing, to turn bearish when everyone's losing their minds as a max bullish, and the news is purely positive. And also worth noting, we're already in a bubble by many metrics. Plenty of risk already, particularly in more speculative plays. For clarity, I'm just starting to prepare psychologically to be bearish. The right time might be 2 years away. But I find game planning and practicing contrarian thinking to be critical to making the right contrarian call in real time." Crypto is indeed experiencing a resurgence, and yes, we are happy with the energy in the crypto market is back. However, as mentioned, there are reasons to stay cautious. Well, for now, we could enjoy the moment with this consciousness. Bitcoin has surpassed the $71,000 mark as money keeps rushing into the largest cryptocurrency by market value. It has gained nearly 70% this year, and most of the increase came in the last few weeks, boosted by a flood of cash in a new spot Bitcoin exchange traded fund, as well as hopes that the Federal Reserve will soon cut interest rates. Even though it didn't look like it at first, the approval of 11 spot Bitcoin ETFs by the US Securities and Exchange Commission in late January marked a watershed moment for the industry, following an 18-month-long crypto winter plagued by a string of high-profile corporate bankruptcies and scandals. Net inflows into the 10 largest US spot Bitcoin funds reached $2.2 billion, with more than $2 billion of that going into BlackRock's iShares Bitcoin Trust, according to LSEG data. Meanwhile, other major crypto tokens such as BNB, Chainlink, and Polygon rose to 6%. Unfortunately, Solana, XRP, Cardano, Shiba Inu, and Tron all declined. An expert noted the positive momentum in the market is attributed to growing interest in Bitcoin spot ETFs and approaching Bitcoin halving event, which has historically impacted the price of Bitcoin. Now that Bitcoin has surpassed the $70,000 threshold, the next target is at the $76,000 level. Notwithstanding even now, there might be a huge chance for ADA to spike. The founder of Crypto Capital Venture and popular crypto expert Dan Garbardello has revealed that Cardano and Ethereum would trigger a full-blown altcoin season as soon as Bitcoin dominance falls. Garbardello based his prediction on previous cycles where both cryptocurrencies registered notable increases before other altcoins joined the climb. According to the crypto analyst, ETH would soon start outperforming Bitcoin. He noted that when this happens, ADA would join before tokens like Ripple and Solana move. However, the analyst noted that Bitcoin has not yet slowed down its dominance. ADA is one of the top 10 tokens that is set to outperform Bitcoin. To trigger a massive run, Bitcoin's dominance has to fall, as Garbardello mentioned. Well, while we wait for the altcoin season, perhaps Cardano needs to step up its game. Hydra is one of Cardano's biggest projects. The primary objective of Hydra is to empower the Cardano blockchain to handle thousands of transactions per second efficiently and affordably. The project is a collaborative endeavor involving the Cardano Foundation and input-output global engineers. In contrast to common misconceptions, Hydra doesn't rely on a hard fork, and it doesn't integrate as a core capability of Cardano's base layer. But why should you care? Well, Hydra serves as a framework and infrastructure stack that projects operating on Cardano can leverage to enhance the efficiency of specific aspects of their applications. Hydra is a big deal. Last year, the Cardano founder, Charles Hoskinson, refuted the claims that Hydra, the layer 2 scaling solution for the Cardano blockchain, has been unsuccessful. In a video on X, Hoskinson revealed how Hydra has pivoted during the last 3 years and that measuring the network's activity by transactions per second alone might be misleading. According to him, a single Cardano transaction can encompass multiple outputs, citing one instance where a block contained 384 outputs in just one transaction. He said, Cardano is not a TPS system, it's a transaction per transaction system, and each of these outputs can signify more intricate elements such as scripts and proofs beyond mere raw value transfers. Charles Hoskinson further explained that Hydra has developed middleware for developers to build and incorporate its applications for the blockchain network chain. This aligns with Cardano's broader plan of supporting on-chain and off-chain applications like NFTs and decentralized exchanges.
So what happened over a 3-year period is that Hydra pivoted a little bit, and it pivoted into, let's build some middleware that it's going to be really easy for you as a developer to plug into your application, work with Plutus to help get a lot of that complex logic that you should not run on the main network, but run it in a different network, like the batching, like the voting, like the event-oriented programming, the event-based programming where events happen and you have to be around 24/7 to pick them up and do something. Multi-sig, all kinds of stuff that you'd like to run in some sort of other network, and you could build stuff on top.
With this, despite the concerns, decentralized finance activity on Cardano continues to thrive. This growth mirrors the uptrend in DeFi activity on the network as more traders embrace decentralized applications built on the blockchain. Furthermore, at the moment when elaborations were being made about Hydra, the Ethereum co-founder, Vitalik Buterin, posted a proposal to revive Plasma, an earlier scaling approach, in response to major advancements in zero-knowledge proofs. Meanwhile, since rival blockchain Cardano continued to develop Hydra, this reopened debates on whether the projects were copying each other's ideas on blockchain scaling. Some critics even said that Ethereum revisited Plasma is essentially equivalent to Cardano's Hydra, but with the footnote that Cardano's use of an unspent transaction output model makes implementing it easier. A user said that it seems to me that #Cardano is going in the right direction and Ethereum is the one catching up. The copycat accusations came amid a bitter relationship between Ethereum and Cardano founders. Steven Nerioff, the former Ethereum advisor, swiftly criticized Buterin's Plasma proposal. He accused Buterin of copying Cardano's Hydra scaling approach. He went ahead to label Buterin's decision to part ways with Cardano founder Charles Hoskinson early as a major mistake. The irony is that Nerioff asserts that Ethereum is emulating the very person they once dismissed. However, when it comes to Hydra's and Plasma's similarities, there are certain conceptual similarities between using secondary chains or channels to enable faster processing. The architectures have fundamentally distinct security assumptions and trade-offs. Another user said, now we see a paper regarding UTXO's model on something that looks a lot like Hydra. It seems to me that #Cardano is going the right direction and #Ethereum is the one catching up. Well, there's no competition about this. Building on existing areas of research is quite common in cutting-edge fields like cryptography. For example, Buterin's proposal leverages advanced and zero-knowledge proofs to improve Plasma, and scientific progress often works by incrementally improving earlier theoretical foundations. At the end of the day, the success of both blockchains are for the boom of the crypto industry. Other projects in Cardano could earn a spike of value, so while anticipating an altcoin season, the Cardano ecosystem can work on outpacing other blockchains in terms of development. There are many perks for Cardano even in this bull season. Of course, the progress will always be slow and steady, but surely. But that's going to do it for today's video. Make sure you hit the subscribe notification buttons, and we'll see you in the next video.